tuning in to another episode of Getting to Know Your Neighbors. I'm working with Park Bench again, which is a community website to interview another local business owner in our community. I'm Hamid Pourkasraei, real estate agent and property manager with Amex Realty. And today I'm here with Reza Sabour, who is an independent mortgage broker in North Vancouver that has been helping many people solve their financing needs. Thank you for joining me, Reza.
Thank you for having me, Hamid. It's a pleasure.
Absolutely. If you are ready, we can go into the questions.
Absolutely.
I was thinking that, we'll do a few so we can get to know you, and then we'll get a little bit more technical after.
Okay. Yeah, that sounds great.
Okay. So first question, describe your business.
So I am an independent mortgage broker. I hang my license at Centum Financial Group, and basically my business is basically a business where I focus more on people transitioning either from first-time buyers to second-time buyers. We do a lot of investment purchasing, financing, mostly focused on the residential side. I do have partners who do commercial mortgage financing as well and construction financing as well. But I tend to be focused a lot more on first, second, and third-time home buyers on the residential side. And I've been doing it for almost 9 years now independently. And then 12 years before that, I was in the banks, kind of doing similar types of financing and loan positions.
Okay, awesome. So that kind of helps answer the second question, which was, how long have you been a mortgage broker and how did you get started in this profession?
Yeah, so I got my license in 2013 as a mortgage broker. I'm now a senior mortgage broker, so I lead a team in our office. In terms of how I got into this business, I started when I was about 18 years old as a teller in a bank. Really liked the professional financial environment. It kind of beat working in retail at the time, and a lot of my friends were working retail jobs. And I liked the wearing the suit and kind of getting into a more professional setting. And then I quickly moved up through the bank while I was doing university at actually BCIT. I went to UBC for a year, then I transferred to BCIT. And I started doing BCIT in the evenings so that I could work full time in the bank because I really enjoyed it. And then kind of moved all the way up through the banking ranks, and then decided in 2013 that I wanted to go independent eventually.
Awesome. That's kind of a similar story to me because I started in the bank and kind of worked my way up and then eventually shifted to real estate.
Yeah, exactly.
Third question for you. What made you choose this profession?
Yeah, so again, I started as a teller in the banks when I was about 18, 19 years old. I really enjoyed that financial sort of setting, atmosphere. I quickly took a liking to it and wanted to move up through the ranks, and I did that a lot. So I basically moved up all the way through the residential branch type environment with all the different roles from lending to investments to managerial. And then I eventually decided in 2013, after 12 years in different banks, that it was time to sort of just go out on my own. And mortgage brokering was the natural fit because I really enjoyed lending when I was in the banks. And that's how it all started.
Perfect. So going into more of the technical questions, question 4, what is the difference between a mortgage broker than a mortgage specialist from one of the big banks?
So very good question, and I get this question a lot. So in British Columbia, it's actually not compliant to call yourself a broker unless you're independently licensed. So a lot of the times we have bank mortgage specialists who sometimes call themselves brokers, but that's actually technically not true because they don't hold a license. So as a licensed independent broker, that's the term that we're allowed to use. And the main difference is that when you're working for a brand, so whether it's the bank, any one of the big 5 banks, that's the name tag that you wear, and those are the products that you represent. And there's always going to be an inherent bias to your offers and your advice because it's very sort of tunnel visioned into your product line. And that's kind of the issue that I had after 12 years of being in the banks, is that sometimes I knew my products weren't exactly the right fit for that specific client, but I couldn't really tell them that because, that's the bank that's giving me my paycheck every week. And, I have targets and goals I have to meet. And so I didn't love that. And as an independent broker, the main difference is that we don't work for the lender. we work for our clients and we represent our clients to the lender. So, so it's kind of a win-win situation because, banks compensate us relatively the same. So there's really no bias for me to take a client from one lender to another. The goal as an independent person is now strictly just to make sure that my client is taken care of.
Right. Okay, perfect. Now, next question for you. How has the landscape of lending changed over this pandemic?
It's changed in a really, really big way. The biggest difference I think that we've seen is obviously with rates. Both fixed and variable rates kind of bottomed out during the pandemic. All the government stimulus that was going into the quantitative easing programs, it started at, I think, close to 5 or 6 billion a week. Now it's down to 2, and eventually it'll go down to 1 as this sort of recovery process is kind of, well underway now. So rates were the biggest impact. And I think what we saw is a gigantic also migration of what we sort of call the urban exodus. So many people were working from home as a result of being in quarantine. And a lot of companies realized that this is working for them. And a lot of families realize that this is working for them. They like the home life balance. Productivity wasn't really being affected. And so the question then came is, well, if I'm working from home and I no longer have a commute to worry about, 1 hour drive to work, 2 hour drive to work, then I don't mind moving out all the way to, to Wasson to buy a house because I don't have to leave anymore. So my dollar goes further out there. I can buy a bigger place out there. And now that I'm home, I need a home office or I need a second bedroom. Because home is everything now. It's my place of work and everything. So we saw that huge exodus of people leaving the core of the city and going to the suburbs to stretch the dollar and get more space.
Right. Now, next question is, what are your recommendations or a checklist for anyone trying to get a mortgage right now?
So, some of the biggest things that you can do are some of the simplest things. So, often people complicate this question way too much by thinking they have to go into such crazy level of detail for a lender. Really what the lender is looking for, first and foremost, is your character. So how is your character defined to the lender? And that's really with your credit history and your credit score. So I think my biggest piece of advice to anyone who's starting the process is, obviously, if you have a job and you've got some money saved up, those are kind of a given. We'll obviously look at your employment confirmation, we'll look at your down payment. But if you have anything like bruised credit, it could be something as simple as an unpaid parking ticket. When those get sent to collections, your credit score just tumbles and tumbles and tumbles until you pay that off. I've had a client last week who's, a 6-figure earning executive at a large accounting firm, has stellar credit normally, but wasn't aware of a $105 parking ticket that was sent to collections by the city of Vancouver. He thought he had paid it, or he thought his spouse had paid it. Turns out it was never paid, and his credit score had plummeted over 250 points. So all of a sudden now we're looking at a person who by all means should be able to get the best financing available, having to fight his way through a regular bank to get a normal mortgage at a normal rate because his credit score didn't meet the threshold of the bank.
Right.
And then I have to explain to the lender, that it was a one-off situation. And so really your credit score is the sort of the DNA of your application. That's where we really need to focus, make sure that it's all taken care of, and then, tie up those loose ends before we start.
Right. Okay. Wow. That's a crazy story.
Yeah. Happens a lot more than you think.
Yeah. I mean, I remember from the bank too. So yeah, no.
Yeah.
Next question for you. What is the most common problem or issue you run into when working with a mortgage application?
Sometimes it's just incomplete information or not having the proper documents, so depending on the type of category you fall into, whether you're employed or self-employed or you're a freelancer, or you're a contract worker. All of these different categories have different requirements for documentation and very much a different approval process from the lender's perspective. So, once we analyze what kind of a client we have in front of us, we send them the appropriate list of documents for their type of profession. And, the biggest situation we run into sometimes is incomplete documentation, people who may be behind in filing their tax returns, people who have like something as simple as expired ID. It could honestly be something as little as that, or it could be as something as being really behind in your taxes. But I think the biggest stumble is just often documentation.
Okay, documentation. Now, switching gears a little bit, going into more rate-focused questions. We initially saw interest rates come to historic lows at the beginning of the pandemic, and since then they've fluctuated up and down a little bit. Where do you see interest rates going in the short and midterm, and how will this affect people's borrowing power?
So very good question. Interest rates, as I mentioned earlier, had bottomed out really in 2020 and for most of 2021, as we've seen. It's only now in the last 3 weeks or so that we've seen fixed rates starting to really go up. And the reason they're going up is because it's a reflection of the bond yields. So one of the biggest things to understand, and I always try to educate my clients on the importance of understanding this, is that fixed rates are linked to the Canadian bond market and how the bond yield performs over time, whereas variable rates are not at all related to that segment of the market, and they're more related to things like inflation and the bank's overall target with respect to GDP and overall economic growth, how much stimulus we're pumping into the economy, quantitative easing, all these other factors that sort of round up our economic health, if you want to look at it that way. Right. So, because bond yields have been spiking in the last month or two, we're now seeing that reflect usually very quickly within the fixed rate market. Fixed rates have now gone pretty much all above 2%. So we're looking at like 2.2, 2.3%. Variable is still at historic lows. The discounts are still historically steep, and that is not expected to change until at least Q2 or Q3 of 2022. Although there is a little bit of pressure on the Bank of Canada to potentially act sooner because inflation's at 4.4%, which is more than double the bank's forecast. So there may be some pressure on that, but I think in the short term, variable is going to stay low. Fixed is likely going to continue to climb by the end of this fall and well into Christmas. We should be probably around closer to 2.69, 2.7%.
Okay.
And variable will probably start to see a rate hike or two in 2022.
Perfect. Now, following up on that, so a couple articles I read recently, and I'll quote. So in a recent article in the Financial Post, Derek Holt, who's the Vice President and Head of Capital Markets Economics at Scotiabank, predicted that there will be 8 rate hikes over the next 2 years. In another article from Central One, the chief economist, Brian Yu, said that he expects the Bank of Canada's overnight lending rate to remain at current levels until the second half of 2022, where he expects a 25 basis point increase and predicts 75 basis points in 2023. What are your thoughts on this? And what is your advice for people who are thinking of purchasing a home in the near future?
Yeah, another very good question. So, in my relatively long career now, if I had $1 for every time a bank economist made these predictions and was correct, I'd be a millionaire right now. And unfortunately, or fortunately, depending on which side of the coin you fall on, most of those predictions don't end up actually materializing. The bank economists tend to be always very bullish with these types of, forecasts. And often they're way ahead. They're jumping the gun, usually way ahead of what normally ends up materializing. It's interesting because Central One and the credit union economists in general have a history of actually being a little bit more accurate than the banks do, which is very fascinating to me because, credit unions are provincially regulated and banks are federally regulated. But from my experience, the Central One credit union's always been a little bit more accurate. Now, we're also in a global pandemic, which has never happened in our lifetimes, even in our parents' lifetimes. And so any economist who tries to tell you what's going to happen 2 years from now is guessing at best.
Mhm.
We're in a very unprecedented time. On one hand, you have vaccination rates that are north of 85, close to 90% in this country, which is really what was the catalyst they were looking for to start increasing rates, is when we started getting vaccinations very high. Tiff Macklem at the very beginning of the pandemic, the Bank of Canada governor said, when vaccinations start to reach a level where everyone's been vaccinated and we can open things up again, we'll start to increase rates. At the moment, that has very much been true to the message that they initially set. They've had the opportunity to raise rates several times during this pandemic and they haven't. I tend to agree a little bit more with the economist from Central One. I don't think it'll just be one rate hike personally in 2022, like he's saying. I think we're probably going to see 2 or 3 potentially. I don't think we're going to see 8 over the next 2 years. However, again, anything could happen, and we're definitely going to see multiple rate hikes, whether they happen all in 2022 or they're split between that and the next year, 2023. It really is going to depend on if this current inflation situation is really transitory and temporary, or is it going to be a permanent situation? Most of the economists and the Bank of Canada is saying 4.4% inflation is temporary. Even as soon as January, we should see that number start to head down.
Mhm.
Most of them are saying that by February or March, inflation should come back down to 2.5%, 3%. If that actually happens, then I think we'll start to see rate hikes happening potentially a little bit more quickly than the central bank is predicting. But if we don't see a softening on inflation and people are really struggling financially, then I can't see the Bank of Canada, jacking up rates 3 or 4
Right.
times in a row, because that would just put too many Canadians in a very hard place, especially as a lot of the CERB programs and stuff are coming to an end.
Right.
So there's too many factors there for 8 rate hikes in a very short amount of time. But again, this is a very unicorn time in history,
Right.
so anything could happen.
Right.
Yeah.
Okay. So with that, we're done with the technical stuff. We'll get a little bit more fun questions for the last 3 here.
Sure.
As you may already know, Parkbench is a community website that shares everything local. So with that being said, can you please share with everyone what you love most about North Vancouver and why you chose this neighborhood?
Absolutely. So I love this question because, I grew up in North Vancouver. I lived in North Vancouver from when I was about 6 years old up until I was about, 30 something. And then I moved downtown with my then girlfriend, then fiance, now wife. And we lived there for 7 years and I loved living downtown, but I knew that as soon as we had kids, I really, truly wanted to make sure that I'm back on the North Shore. Just the combination of nature, the combination of the people, the friendly environment. It's just a bridge over downtown, but it just feels like time slows down as soon as you cross the bridge. It's just a very calming place to live, raise a family. I love the local businesses. I love the vibe. I'm lucky enough right now to live in Lynn Valley, so I'm super close to all the trails and a beautiful waterfall. It's just like a 40-minute walk away from me. It's just a gorgeous, gorgeous place to call home,
Right.
and a great place to raise your kids.
Awesome. Yeah, thank you for sharing. Next question, what are your favorite places in North Vancouver?
So my absolute favorite place in North Vancouver, and this is because of a childhood nostalgia, is Lonsdale Quay. So I grew up living very close to Lonsdale Quay. My grandfather, who's now deceased, but when he was alive and I was a little kid, he would come every day and pick me up from elementary school. So he'd walk over. We lived on Lower Lonsdale at the time, which did not look like Lower Lonsdale today, back in the early 90s and late 80s. It was very much the sort of the ghettos of, of North Vancouver at the time. But, he would pick me up, we'd walk down to our home again, we'd have something to eat. And then every day he'd hold my hand and we'd walk down to Lonsdale Quay pretty much every day. And we'd walk through the markets and, we'd buy an ice cream and we'd sit in the food court and he'd have a coffee and I'd have my ice cream. And, And it was just our thing. And, so for me, it's very nostalgic because I feel like my grandpa's still here every time I go down there. And of course, now when you go down there, it's nicer than Yaletown now. It's beautiful. And it's just like an incredible transformation. And just an amazing place to now take my 3-year-old daughter and with my dad, who's her grandpa,
Right.
continue that tradition. So, so that's probably my number one favorite place.
Okay. Well, that's an amazing story. Thank you for sharing that.
Yeah.
Last question for you. Anything exciting going on that customers should know about?
Absolutely. So, 2 things that you should always be aware of in the real estate market when you're looking to buy on the financing side. It's very similar to when you're looking to buy a car. They always say go sort of like right at the end of fall when, the snow is starting to dump in the winter, because car salesmen don't want to have all their cars sitting on the lot covered in snow, right? They want them all gone. So that's the season for buying a car. For mortgage financing, we have 2 seasons for getting financing that are probably your best bet. It's the spring market and it's the fall market. So they're both the most active markets, and they're also where you see the biggest discounts and rate offers and, free legal fees or free appraisal fees, lots of different things lenders try to do to try to entice people to buy. But it's also kind of when everyone is out looking for properties. And so it can be more competitive, but it's definitely sort of the bread and butter time for the lenders. And they're definitely willing to lower their rates and kind of get that going. So right now, being in the fall market, we're already seeing a pretty uptick in activity.
Mm-hmm.
Especially if you're looking to buy in the suburbs. We're seeing a lot of uptick in the suburbs, lots of multiple offers still. And it's continuing that trend of people now, working from home more. My wife works at a university, for example, and she just got told last week that permanently moving forward, even post-pandemic, they're only going to be going to the office or at the campus twice a week. So 3 days a week, she'll be working from home. Right. So a lot of people are faced with that scenario and basically now need a bigger home. Mm-hmm. So we're still seeing that uptick. And but yeah, lots of incentives out there right now in the fall market.
Okay, awesome, amazing. So with that, we have wrapped up our interview. Reza, thank you so much for joining me today. It's been amazing to learn about you, your business, and have a very informative discussion.
My pleasure. Thank you so much for having me, Hamid, and all the best to you and your business as well.
Thank you. So with that, I wanted to thank everybody that's watching as well. Once again, I'm Hamid Pourkasraei, real estate agent and property manager with Amex Realty. If you have a business and would like to be featured in one of my interviews, feel free to reach out to me today. Also, be sure to reach out to Reza with all your financing needs. He's a great asset to utilize. Lastly, for anything real estate in Vancouver, be sure to reach out to me. See you next time.
Thank you.